Last week I promised that I would be getting excuse me, I would be getting these stock pick videos up every week regardless of how busy I am. Obviously I am a bit late on this one. I'm a day late. So instead of doing the stock picks for the week of June 15th, we are doing the stock picks for the week of June 15th starting from Tuesday. So we're looking at 16 to 19. We're doing swing trading. And this week's a bit different because we did get to witness what happened on the 15th. Usually the stock market is a bit more volatile on Monday, so our stock picks today might be a bit more interesting. And because I was releasing a penny stock newsletter earlier today, the stock picks for today, many of them are actually cheaper because I was doing research and I marked them for this stock pick video. So I'm going to go ahead and open my three resources. The first one's non-essential but interesting and important. It's Morningstar.com. It teaches you what the stock is all about, but it doesn't really help you do technical analysis. The second I'm going to open is a candlestick chart, and I like to use Yahoo's. It's easy to use. Go to finance.yahoo.com, you type in your symbol, and on the left there's an interactive chart selection. We're going to want to switch it to the candlestick from whatever that line is. Switch it to the candlestick, go to 1 month, 1M right here, and that gives us the candlesticks for each day. And we're looking at Yahoo at the moment. That's automatic because of Yahoo. The third resource we're going to use is StockTA.com. This gives us many other indicators that can help us determine our technical analysis prediction. So I'm going to go ahead and go through these 5 stock picks. The first is GLFH. GLFH. Let's figure out what it's about. It's not important, but it's just interesting to know. GLFH is, if you scroll down, it tells you what the company does. It's an engineering and product development company. They are in the oil and natural gas production industry. So if oil goes up, this company will probably also see its stock go up. And generally, if you want to invest in oil, you are better off investing in an oil company than oil itself. If you want to look around at Morningstar, you can find out some other info about this particular stock, but we aren't going to be looking around Morningstar unless we are investing for the long term. When we are swing trading, instead we are looking at the short term. So we're looking at the candlesticks and we're looking at other technical indicators. Go back to Yahoo, put in GLFH, hit enter, and there we go. So obviously this is a penny stock. It is traded on the OTCBB. So this is basically for penny stocks, stocks with low volumes trade on this market. If you buy into it, you'll see that the volume is actually very low and it doesn't even appear here on Yahoo. So it's not very useful for us. Why don't we just go directly to StockTA.com? If I remember correctly, we have a green candlestick. Here's the past couple of days, but it doesn't give us the candlestick. For stock with very low volume, often because there's so few trades within a day, you won't see much. Obviously this one is kind of wacky with its movement, but on Monday we saw a spike in the price, and that spike is interesting because I believe GLFH, I believe it has brought us above a resistance level that is now a support level. So yeah, you'll see we have support levels at 28 and 29. More importantly, there's one at 28. And we are above that number. We're at 3. So the stock could drop to 28 cents, but it's unlikely to drop below that. In addition, this stock is oversold. You can see briefly from this very, very brief downward trend that doesn't even chart on the trend analysis here, that the stock has been going down quite a bit, and the stochastics are telling us that the stock is likely oversold. Too many people have sold it, it's below the market price, and this recent candlestick, this spike in price, is probably the market reacting to the low price. So if we get in on this oversold stock, we can probably ride it up to at least we could get up to probably a penny. It's not a lot of money, but I mean, if you're putting a lot of money in this trade and you get an extra penny, well, that could be a lot of money. But what we're hoping is that this oversold trend will bring us to the true market price, which will probably be between this resistance and this support. So we're looking for around 35 cents instead of 30 cents. That'll give us 5 cents for every 30 cents we invest, which is a pretty decent ROI. You can see that's almost 20% ROI. Now, if things go very well for us and we go all the way up to this resistance level, we've made quite a bit of money. So this is a penny stock. It's good for anyone to play. It's probably, unless you dig into what the company does, and you can do so through Morningstar, you're probably not going to know whether this is a good long-term hold, but at least for the short term, this is a decent penny stock trade. GLFH. The next one we're going to look at is HL, which I believe is also a penny stock, but it's trading on the New York Stock Exchange. It's a mining company. It's a penny stock because it's trading below $5. Anything that trades below $5 is technically a penny stock. So this is what we got. Again, the stochastics tell us that the stock is probably oversold. Again, we have this downward trend in the short term, and we're at a bottom, but there's no real support or anything like that. It's likely that the stock is going to bounce back, and you'll see that we have a decent looking candlestick here. This is called the Hammer Candlestick. The Hammer Candlestick is a big green candlestick with a long tail at the bottom, a long shadow. And what that tells us is that we have pretty much already tested the bottom of the market, and that's that low point. So if you scroll over here on Yahoo, Yahoo Interactive Chart, you'll see at the upper left there's a box that tells you the open, close, low, high, volume, and percent change. Now we want to scroll over the most recent candlestick and look at that low point, the tail. The low is at 2.85. So that's probably a new level of support. So it's unlikely that this stock is going to drop below that level. When you see a hammer candlestick, it's generally a reversal pattern. So if you have a downward trend, the stock is going to reverse and go upward usually. And another reason I chose this is we have an area gap here. I hate when Google or whatever. Okay, anyway, you'll notice that, I don't know if it's just my computer or Yahoo itself, but it often, when I'm playing around with this, it doubles the most recent candlestick and it just screws up the entire chart. So I'm going to refresh here. But what we have is a candlestick chart that shows us there's a gap between these two prices. If we were looking at the line chart, we wouldn't see that. But if you look at the candlestick chart, you'll see that there's a price gap. And my specialization is trading after a price gap. Although this price gap is quite a ways back, it's a couple weeks back. The fact that the volume associated with this tiny gap, it's tiny because it's within the trading region, tells us that this is probably what's called an area gap, and area gaps tend to fill. If you're interested in learning about how to play gaps, you can download my gap game plan. It teaches you everything you need to know about trading after a gap. But I'll just tell you, for the short term, if you see an area gap like this, most of the time, like 70% of, more than that, like 80% of the time, I forget the exact statistics, but safely you can say 70% of the time the gap will fill over time. There we go again. So if you see a tiny gap like this and it has not filled and we're at a low point and we have a candlestick that tells us we should buy, and we also have technical indicators that tell us we should buy, then you can often make the prediction that the stock will go up and fill this candlestick. So again, we go to the candlestick and hover over it. It gives us a box that shows us the open, close, low, high. And we want to know the low because that's our price target. The low here is 3.2. We're currently at 3.06. We hope to get to 3.2. That's a 14-cent gain on a $3 investment. So we're aiming for a ROI of about 5%. So hopefully, let's say you put in, you just want to put in a couple $100 for playing around. Let's say you put in $500 and you get 5% of that. then you are getting 25 bucks on a $500 investment of profit. So that is basically how you play an area gap. Now there are multiple gaps, multiple types of gaps you can play. Area gaps tend to be the most conservative, and it's good for a bet like this where you're putting a lot of money into a stock instead of playing something like a call option. But for this trade, I would recommend you just go ahead and buy the stock, wait for this to close. You can even put a limit order for 3.2, and the brokerage you're with will automatically sell off that stock once it hits 3.2. Now if you're interested in what the company does, you can always go to Morningstar, type HL, and it'll tell you what it does. It's a mining company, obviously, and they mine for lead, zinc, and bulk concentrates. So if you're interested in these markets, and gold. So if you're interested in silver. So if you're interested in any of these commodities, this would be a decent investment. You can also look at the trends of these different commodities and determine whether this is a good company to invest in. But always remember, when you invest in a mining company, check out the mines they own, check out the property they own. Some people or some companies have low quality properties that don't produce a lot of the minerals or materials or commodities that they're mining. So you always want to look into that before you make that investment. That is it for HL. Let's go on to KMI. I believe one or two of these were not penny stocks, but most of them were. So this is not. Kinder Morgan. Kinder Morgan is a energy transportation and storage company. So they're about pipelines that move gas. You're seeing a theme here, I guess. I don't actually pick these because of those themes. I pick them because I do research on, for penny stocks, I research rumors, but for stocks like this, I just look at the candlestick charts and the technical indicators, and then I look at the company itself to determine whether I want to hold on for the long term. This would be a decent long-term hold for a couple of reasons. First of all, well, let me just say, when you look into Morningstar and they show you a yield number, that's telling you that this stock has dividends that they pay out on. So if you hold on to the stock for a long enough time, they will send you a portion of their profits, which is about 5%. So if you invest that much money, you'll get 5% back per year while you keep the stock. So it's just like free money, and a lot of people play with these stocks by holding on to a portfolio of dividend stock and just getting the money every 3 months, usually. As you can see, every 3 months they pay you. Here they'll pay you 48 cents per share. So if you wanted to, you can hold on to this for the long term, but I'm making a short-term prediction on this stock that the stock is going to be trending upward in the near future. And that would be great because you can get in on this while it's at a discount. You can hold on to it, get the dividends, and then sell it later. Now obviously the stock is very bearish overall, so people don't want to buy it and hold on to it. They think that if they do so, they're going to be paying more than they should for the dividends that they're getting. And you can see that we're at an all-time low. However, despite being at an all-time low, that all-time low came with a with a gap. Now, this type of gap is interesting. What happens when we have a gap is usually we see a very large, long candlestick, either red or green. But in this case, we saw what's called a doji star. It's just a tiny candlestick where the open and close price are essentially the same. And this type of candlestick implies that investors don't know what to do. They're conflicted as to whether to buy the stock or whether to sell the stock. I did it again. So you usually don't want to play after a doji star. Let me check real quickly. In my gap game plan system, I point out when you want to play a doji star. Here's the only time you really want to play a doji star. When you see a green candlestick and the doji star is above it, you can play this after an up gap, and the up gap will usually continue widening. But in this case, we have a doji star prior to the candlestick, and what this means is that investors were conflicted as to whether to buy or sell. Then they decided on the next day that the decision was to buy. So the stock moved on Monday. It moved from what? From 38.39 to 39.36. So it moved up an entire dollar, which means that the momentum is probably upward now. And because of this gap with a large volume looking like it's not going to actually trail down, this will probably fill. This gap will probably fill. So you can go ahead and hold on to the stock and get it at a low. It'll probably even out. And if it breaks this resistance level down here at 39.61, we're probably safe. So what we're doing is we're going to buy this stock, hold on, let it break that resistance level, and then you can hold on for the long term and get a decent dividend out of the stock while you bought it at an all-time low. For holding on to it for the long term, it looks a bit risky because the trend is downward, but you can also do some trend analysis to determine whether this trend will hold, and I will teach that in another course of mine. So if you're interested, send me an email. That course is not released yet, but will be soon. That is KMI. Next is Mankind. So I believe I recommended this a week ago or a couple weeks ago. It's familiar to me, but I forget when I recommended it. Someone asked me a question about it recently. They said, I forget, they said they got into Mankind too late or something, and they were worried that it's not going to do so well. Well, it's interesting you brought that up, whoever you were, I forgot. Very sorry. But when I looked at the stock, I looked at it today again, and I thought, well, you didn't make a mistake in choosing Mankind. You actually got a decent stock and you're holding on to it at a pretty good time. Now, if you don't know who Mankind is, it's a development stage company in the discovery of diabetes diseases. I make a lot of stock picks based on diabetes and obesity because I believe that this area of biotechnology will probably begin to boom pretty soon as America gets fatter and they get more concerned with health. So recently I've been looking at a lot of stocks like this and determining which would be the best to invest in while this market is at a relative low. So that's why I originally chose Mankind, and the person who was worried about Mankind was worried about Mankind in the short term, but actually in the short term it looks good as well as in the long term. So here's what we got from Mankind. I'm going to ignore what my personal my previous recommendation because I don't remember when I made it, but what we have here is what looks like a tiny little gap that fell. It almost looks like a penny stock pump and dump. Like it was pumped up here, and then those people who were pumping the stock dumped it, and now it's down to a new low. Well, what's interesting is we have an area gap right here. You can tell it's an area gap because it's very small in terms of volume, and it's within the trading region. I really hate this stock chart. But after that area gap occurred, we had two bullish candlesticks showing us that there's an upward trend, and in fact the area gap is already closed. So what happened was probably it was overbought, and investors saw it overbought, sold it off, and now it's oversold, and that's why we're getting in. So let's double check and see if this is oversold. No, it's not oversold anymore, but it did break a important level of support, so of resistance that is now support. So we have a very safe number below us, 5.98. It's very unlikely that the stock is going to drop to below 5.98 if it drops. In addition, the Fibonacci's are bullish, which means that if the stock does drop, it generally has the tendency to retrace its downward steps. So in the short term, this is looking pretty good. And I'm going to just double check my chart indicators. We had an area gap that went down. And so here's how my gap game plan works. The candlestick indicators have a couple folders, and you can look at whether the gaps are going to fill or not. So this was a down gap, and we want to know if it's going to fill. Do we see anything like that? Not really, so that wouldn't have been useful to you in that case. But now that it has filled, we broke a resistance level. The stock is actually in decent industry, and it looks like it's going to be trending upward in the near future. So this is a decent stock to get into, and it's not really that expensive either. Let's go ahead to the last stock pick, NEM. What is NEM? And what are NEM's indicators? So this is also a mining company. It's a little more expensive. There is a dividend, but it's pretty negligible. The mining company is mining what? Copper and gold. Okay, copper price recently is up. Gold price is also recently up. They focus on these areas, so if you want to invest in the long term, please check out these areas and see if they would be decent for mining these two commodities. But let's look at the candlesticks and make our determination based on the candlesticks. So again, we have a gap from here to here. This gap is interesting because though it didn't move much, the volume is quite large. You can see these bars at the bottom. These are the volume levels. The volume on this one was quite large, but it didn't trend downward like you'd expect it to. This is called a continuation gap, and usually it trends downward. Now, it didn't trend downward, but it did have a couple doji stars. These doji stars tell us that the investors were really confused as to whether the stock would fall or rise. They didn't know what to do. Finally, on Monday, investors made their decision. The stock was probably too low. They bought into the stock. We saw the strength of the bears and the bulls through these candlestick shadows, and the area gap filled. Okay, now that it's filled, where are we? Well, interestingly enough, we are above a support level. So if the stock does fall, it's not going to fall. It's probably not going to fall more than about 7 cents. 6, what? It's not 7, 12 cents. It's probably not going to fall below 23.91. And nothing interesting here. But I mean, we broke a level of resistance, and now it's a level of support. So it's very likely that the stock will bounce between these two lines, the green line and the red line. If it does hit that red line, we've moved from what we're getting in on at 24.03 to 26.52. That would be a $2 and $49 gain on an investment of $24. So we'd have an ROI of about 10% if we hit that resistance level. So my recommendation would be to go ahead and buy this stock, set a limit order to sell the stock at 26.52, and you can get a 10% ROI on this company. So that is it. I'm going to leave these stock picks up for you for a second. GLFH, HL, KMI, Mankind, and NEM. All decent short-term stock picks, possibly 1 or 2 decent long-term investments, but do your research before you invest. If you have any questions, leave them in the comments below.